You want to pick your first stock, but the market feels like a wild jungle full of hype, crashes, and confusing charts. Don't worry, I've got you. In today's video, I'm walking you through the basic steps on how to pick a stock. No complicated formulas, no guessing games, just real steps you can take today. Already have a favorite company you want people to know about? Feel free to throw them in the comments below. Let's get to it. Here's the first rule of stock picking. Start with companies you already know and use. Do you have an iPhone? Do you game on Xbox? Use Google every day? These companies, Apple, Microsoft, Alphabet, are part of your daily life. The best beginner stock pickers don't try to outsmart the market. They invest in things they understand. Warren Buffett's #1 advice: never invest in a business you don't understand. So write down 5 to 10 brands or apps you use all the time. That's your personal watch list. Once you have your watch list, it's time to do a little bit of research. You don't need to read 100-page reports or be a math genius. Here's what I look at. Understand the business model. What do they sell, or how do they go about making money? Are they profitable? It's generally smart to invest in companies that make a profit. There are a lot of companies that are exceptions to this, as they may be in early growth stages and are just trying to scale. But in general, you want companies that are already making a profit. Who is their competition? A strong company has a moat, something that sets them apart. This allows them to have a significant advantage for many years to come. What's their reputation? Bad press, lawsuits, or constant scandals? Red flag. How has the stock been trending? I always like to look into how the stock has been performing recently and the past few years. Historical performance isn't a guarantee, but it's a guidepost if a stock has grown well over time. Keep it simple. If a company makes money, has products people love, and isn't constantly in drama with a growth trend, that's a strong start. Let me take you through a real example. Let's take a look at Microsoft. First, I already know the brand, Microsoft Office, their cloud service Azure, and of course, Xbox. They make money through software, cloud computing, LinkedIn, and even AI partnerships like OpenAI. Their financials are strong. Just Google Microsoft earnings, and you'll see billions in quarterly profits. Their reputation, outside of company layoffs or price hikes, it's hard to find anything negative as their brand is really trusted. Their 5-year stock chart, consistent upward growth, not just hype-fueled spikes. Microsoft is one of those companies that's deeply integrated into how businesses and people function every day. It's a stock I understand, it's trusted, and it has long-term potential. That's exactly the type of company I'd consider adding to my portfolio. You can do this same process with any other companies that interest you. Just make sure you have a good feel for the company and do the right research before jumping in and buying it. Once you have a list of companies you like, it's time to narrow it down to the ones you will finally buy. Just remember, we don't want to go all in one company. Even if a stock looks amazing, don't throw all your money at it. Keep your total portfolio blend at 50% index funds, 40% stocks, 10% cash. If you want to learn more about why you should use this blend, be sure to check out my other video linked at the end of this. Overall, diversification protects you. One bad stock won't wreck your whole plan if you're balanced. This means we want to spread that money across several stocks we like. I generally recommend at least 5 individual stocks, but no more than 10. Once you get above 10, it becomes too challenging to keep up with all of the companies and how they are doing. So how much money should you put into each stock? The rule to remember is to not have more than 20% of your total portfolio in one individual stock. I generally like to have more of my money in the companies I believe the strongest in, but I make sure to keep it to 20% max. What does this look like when I bring it all together? Let's say I have $10,000 to invest. I want 50% of my money in index funds, 40% of my money in individual stocks, and 10% left as cash. This means I would put $5,000 into index funds, leave $1,000 as cash, and finally would have $4,000 to put into individual companies. I settle on 5 companies I want to put my money into: Microsoft, Costco, Nvidia, Alphabet, and Amazon. I need to make sure I do not pass my 20% threshold, so I settle on the following blend: 10% into Microsoft, Costco, and Nvidia, putting $1,000 each. 5% into Alphabet and Amazon, putting $500 into each. This brings my total individual stock investment to $4,000 and keeps the blend of money in my portfolio to 40% of my total I had to invest. Simple enough, right? Finally, remember to automate investments for each of your stocks you pick. You can set them up weekly, monthly, or whatever works best for you. This allows you to build on your position in each and makes it so you don't have to remember to keep adding to them as you get more cash available to invest. So there you have it, how to pick your first stock the smart and easy way. Start with what you know, do your basic research, trust steady growth, and stay diversified. If you learned something today, please hit that like button, subscribe, and turn on notifications so you never miss a beginner-friendly investing tip. Have an investing idea you want to learn more about? Throw it in the comments below. Let's grow your portfolio one smart move at a time. See you in the next video.